Aloha and good day. This is Clint Hansen with Maui Luxury Real Estate, and you're listening to Maui Real Estate Radio. We have the whole world freaking out. Cats are marrying dogs, the sky is falling, you name it. But the truth is that there are a lot of very serious implications associated with the potential of the Minatoya, revoking the Minatoya rule. For all of you who do not know that, the Minatoya rule is about a third of all rentals and more importantly, about half of all owned rentals on the island that aren't large hotels and things of that nature. So they were originally allowed to be vacation rentable because they were built, purpose built for that. And it, of course, helped inject a lot of capital into our very geographically isolated location, and the towns grew as a result of it. Now that housing is at an absolute impasse from a lack of building and infrastructure problems, the council is introducing this bill to hopefully free up more housing for locals. And it definitely needs to be looked at from all perspectives, both personal, because there are people majorly impacted associated because of the fire, but
Mm.
because of housing in general, because we have actually had a shortfall of almost 10,000 homes. Of course, there's no real specific number, but it's like somewhere between 5 and 10,000 for 20 years now. So the fire has certainly made things worse, and I can understand striving, but I'm one for creating, not destroying. So it's important that we understand the other side of it, not just the personal and emotional stories that we've been getting. The economic one, which is why we have Paul Brubaker here today. And of course, always Byron Yap, my co-host. So, Paul, you want to introduce yourself?
Oh yeah, thanks, Clint, and aloha, Byron and Clint.
Yeah.
I'm Paul from Oahu. Um, Spent many years as a commercial bank economist, and have been in private practice as an economist for about 15 years now, specializing in the Hawaii economy, and so follow the real estate market among other things quite closely.
Oh, excellent. And Byron, please tell us a little bit about yourself.
I'm Byron Yap with American Savings Bank. Run the team leader for Maui. We manage Molokai and do other islands to Kauai and things like that.
Mhm.
It's great. Everything is going good, and I'm here excited. Want to hear about this Minatoya thing and learn.
And before we kind of go into the nuts and bolts of it, I've definitely seen some impacts already. I had a buyer pull out, and they've actually moved to a hotel zone property as opposed to one that is protected under the Minatoya. And we'll be getting into the legality of the protections on a separate radio show. We won't talk about that today. It's really more to focus on the economics of it. But before I do that, have you seen, Byron, people pulling out or changing as a result of these recent developments?
Yes. We've seen a fallout that came out because people are concerned, which way it goes,
Mhm.
and so we just got to kind of wait, and I think everybody's got to have an equal input on both sides and then kind of figure out where is the common ground, is there common ground, isn't there common ground.
And this is something that's not new either, because we have actually had multiple attempts in the past, which is why the Minatoya opinion, who is a person of corporation counsel, got codified into law. And then the Senate changed, I think, 21, I don't know. But anyway, they now have the ability and have introduced this bill. And I wanted to talk more specifically with Paul. Paul, tell us, because I know you've done some preliminary research on this, given the years of bouncing this idea around, and I would love your input on it.
Sure, thanks, Clint. I have done research specifically on this issue. I was asked by a client a couple of years ago to begin looking into it, but of course, issues like this have been, you know, bubbling in the back burner of Maui politics for many, many years. And the challenges of housing supply writ large, which have confronted Maui County in recent decades, um, are the sort of underlying foundation for how we've gotten here into this kind of strange space where people think that living in a vacation condo is what people who would rather live in a house would like to do. And those two problems to which you alluded, the inadequacy of Maui housing supply, and then more recently, this attempt um, to require private property owners to give over their properties to a use that is not their preference, um, are sort of missing the deeper issue, which is you just build more houses, and then we wouldn't be talking about any of this. And indeed, Maui used to build more houses, so it's not even like Maui's never done this before. But in particular, the the idea of forcing short-term rental owners, or obligating them, owners of properties in apartment zone areas, which mostly are located in the agglomerations that are more narrowly defined as resort areas. The idea of compelling them to offer those units for long-term rentals came up, has come up from time to time, began to build in the last decade as part of the concern about over tourism and the inadequacy of destination management and the challenges of tourism governance more broadly, and have come now to occupy this, not just a primary position in what seems to me, appears to me to be the hierarchy of policy interventions, but it seems to be like the only thing people want to do. So it's all wrapped up in this other issue of, how much people depend on or hate tourism, as the case may be, which in Maui's case is a significant, point of conflict because 30% of Maui's economy is directly and indirectly tourism related. That's just a fact, Jack. So in this instance, if you take away a third of the lodging inventory on Maui, then a third of Maui's economy evaporates. And so, as I say, prior to the wildfire event last August, 9 months ago, almost exactly yesterday, which brought to the foreground, brought to the front burner yet again, this idea of prohibiting short-term rentals. Even before that, people were interested, and I did the analytics. I mean, I did the research. I used the state's inter-county input-output model to model the impacts of eliminating 1/3 of Maui's lodging inventory without replacement. Right, you're just going to do away with those places to stay, and therefore being unable to lodge the visitors who might have used that inventory their predictable adverse economic outcomes of a non-trivial magnitude. I mean, they're large numbers.
Non-trivial. So
Now,
what does that
of course,
mean, non-trivial? Because
well, let me
I
read from the
mean,
table. I
yeah.
have for Maui County about 2 billion in foregone output. That's in an economy that's an $11 billion county economy, maybe 12 billion on its best day, and 10,000 jobs lost. So
Wow.
now to put that in perspective, the wildfire 9 months ago has, and more importantly, not the wildfire itself, because, I mean, not to be, not to seem uncompassionate, but Wailea is still open. You know what I mean? The messaging in the aftermath of the wildfire, and in particular social media messaging, which was "Do not come to Maui," and in fact, kind of opportunistic social media messaging, wherein among the two groups, the people who rely on tourism as their economic mainstay, and people who want to see less tourism because they're just hating on it or for whatever reason they have, the messaging that came from the latter group opportunistically odiously exploiting the wildfire catastrophe to get that message: do not come to Maui, do not go to Maui, as it was Aquaman-splained to us on Instagram, do not go to Maui, became a message that has had really long-lasting and deep effects. And if you've traveled on the mainland in the last 9 months, you realize how many people on the mainland got this message. I haven't been in Japan, but of course, at 155 yen per dollar, those visitors aren't coming to Hawaii in large numbers. So the message is out there, and as a consequence of just that event and the 20%, the total Maui visitor days are down about 20 to 25% on an ongoing basis from where they were 1 year ago, pre-wildfire, which was down 10% from a year before that, which was the post-pandemic revenge travel surge. So job loss today in the aftermath of wildfire is 5,000 jobs. And this proposal, if you do the math as I did, would actually generate a much larger impact, at least the 10,000 directly and indirectly related. And of course, there are induced effects that I haven't counted, but could be as much as another 5,000.
The removal of the Minatoya directly and indirectly would be twice as impactful to the number of jobs compared to the fire.
Yeah, let me clarify that those 7,000 units in these apartment zoned areas are associated with 10,000 jobs directly through tourism and indirectly through the economic activities that are in the tourism ecosystem. If you, the delta, that is, if you reduce, so the wildfire reduced a small portion of Maui's inventory, obliterated 2,000 homes and displaced thousands of families and persons. But from the destination standpoint, right, Kaanapali, Napili, Kapalua still operating, South Maui still operating, upcountry, etc. From the standpoint of tourism broadly on Maui, which is still open for business, 9 months later, the loss is about 22% fewer visitor days, persons visiting Maui times the average length of stay, which is about 8 days like the other neighbor islands, but is more like 10 days for people from the mainland. And that loss, as I say, has been persistent because of the kind of the reputation effect, the messaging that accompanied or that followed the wildfire. And so when a delta, right, when a shock happens, you're cruising along and then thud, you go to another level. In addition to the direct and indirect effects, the 10,000 jobs that I calculate associated with the loss of 7,000 short-term rentals, those impacts are augmented by what are called induced effects. So the people who lose their jobs no longer have the incomes to go shopping or whatever. And that could be another 5,000 jobs. So you go from 10 to 15,000 in terms of the delta. It's 10,000 associated with the units, but if you suddenly wipe them out, 10,000 is the lower bound on your job loss estimate.
Lower bound. So would it be safe to say, a safe assertion to say that the removal of these vacation rental properties would be potentially, as bad, if not twice as bad or impactful to the economy as the fire was?
Yes, for different reasons, right? The wildfire effects are primarily associated with the messaging, right? With in a world with information asymmetry, disinformation or misinformation can drown out the true signal. The true signal is that Maui's dealing with a massive tragedy by trying to keep its economy going. So come on down, show your support in any way you feel appropriate, but avoiding Maui, which is the message, is probably not as helpful as you might think. But unfortunately, the messaging, that's the world we live in, right? It's sort of the first mover advantage version in game theory of how the truth gets stifled by the social media feeds.
Totally understand.
And so that's different from just eliminating 7,000 lodging units one time. And to be fair to the jurisdictions, the legislature has enabled the county legally to obliterate short-term rentals. Whether it does so instantaneously is another question. So Mayor Bisson, if I understood, made an announcement last week that said, we'll try to get there in the next by the end of 2025 or 2026. So we're talking a year or two.
Slow motion train wreck.
So slow motion train wreck. Yeah, you lose 10,000. So 10,000 workers and their families can make a decision over time about whether they should even stay on Maui. And that is exactly what's going to happen, because it's not like taking away 2 billion in tourism receipts is going to be replaced by taro growing or some other economic activity.
Well, I've always thought too, and I don't know if this is backed up by research, but in my experience, it's kind of twofold on these jobs that are created, because the condos, in my opinion, tend to pay, their staff better than hotels do. Right. Like, cleaners are typically $18 to $25 an hour at a hotel, and condos are $35 to $45 an hour, sometimes even more, depending on, if it's a one-person job or, they have a two-person team going through. So, and then the second part is, and this is what I'd love to have a little bit more research on, which I'm sure you don't. Perhaps it's a safe assertion to make, but in my experience, the profits associated with these condos tend to be more reinvested in stimulus into the economy than hotels, because those are owned by people that use those units. I mean, they typically are coming here, improving those units and re-spending those profits back into the economy. And many of them don't even turn a profit. I've started the process of questioning a few of my clients, and one of them had actually owned, most of my clients only own one vacation rental. But I do have one that A, owns two, and then B, owns them cash. Of course, a loan really eats into any kind of profit margin, but the fact that they own it cash means that they typically will have more. After management, after cleaning and whatnot, I asked what amount, and she looked at her books and stuff like that, and about 75 to 85% of that money that she makes goes back into the unit, into here, as well as basically her family using the unit, and plane tickets out here and things of that nature. So to me, it seems to be a disproportionate share in the economy and stimulus compared to just the average stay created by either hotels or whatnot.
Let me break this down. You've mentioned three things. So one is the structure of the underlying economy with respect to this inventory versus other kinds of lodging or housing units. You've mentioned this idea of reinvestment, of what the owners, who the owners are, where they are, and what they do with the proceeds of their investment. And then more narrowly, you talk about profitability. So let me start with the last one and then work backwards. Right, you can generate profits and recognize them in the accounting sense, and or some of the returns on your investment can be passively enjoyed by improving the value of the asset. You mentioned reinvesting in the property substantially, or expanding it or whatever. So so the fact that you might not have accounting profits doesn't necessarily mean that it's unprofitable. You see what I mean? And then different investors have different corporate structures. Individuals often will have a limited liability corporation. You have C corps that generate profit. Many of the private equity and other types of corporate organizations that own large resort properties on Maui are of that nature. But then there are also S corps, which are generally REITs, an example, a real estate investment trust, who are a pass-through, so that the profit actually goes through the S corp, and then the individual investors are the ones who are liable for any profits on the dividends that they receive. But regardless of the structure, in the long run, it's irrational for an investor to engage in this type of investment if it isn't profitable in some way. And so I think we can safely leave that to the side. If it's not profitable by any measure, eventually the investor will be out of it, or somebody will realize that they could do a better job and make a bid that will let the original investor exit. Turning to I think the other two issues you raised are more substantive. So in terms of the structure of the economic activity itself that's associated with a short-term rental as opposed to a long-term rental, if that's the contrast, or vacation rentals, like vacation rentals in condos, or we sort of enumerate them separately, but in the case of Maui and Minatoya and these apartment zone areas, there's some overlap there. But those are distinct kinds of lodging models from fractional or timeshare interval ownership, and from traditional hotels, which used to dominate, but for a variety of reasons, financial innovation being the main one, risk management, the pattern has diversified away from hotels towards fractionals and timeshares, interval ownership, and then this large, particularly for the neighbor islands, this large group of lodging units, which are condos or vacation rentals, and which are democratized. So they tend to be owned by individuals, small investors, as opposed to the large global lodging brands that operate the big properties for private equity and other insurance companies and the people that own the actual hotels. So if your name is not Marriott or Hilton, right, it's just Brada Brada or, Auntie Minatoya or whatever, you own a condo in the Pili, or, your auntie owns a condo, your auntie from Las Vegas owns a condo in Kihei, and that's in the vacation rental pool. And that democratization has been enabled, I'm looking for my smartphone, by hosting and booking apps. So it's possible now, even if your name is not Marriott or not Hilton, to participate in this economy. Now, in terms of the structure of that economic activity, in my analysis, I used the state's, the DBED, Department of Business Economic Development and Tourism, the silent T at the end of DBED, which is not a metaphor, the silent T. I used their inter-county input-output model. So it employs the structure of different economic activities and their interrelationships, getting to the point you were making about, some of these people make good money. I know I've heard I have a family member that had a tenant in his Ohana unit at one point that was a window washer, or maybe still is a window washer on the Konokohala coast, makes $200,000 a year because he washes windows at tourist resorts, and it was a good business. Now, if you include just the Oahu, just the Maui impacts, as I have in talking to you, the 10,000 jobs, the state's model actually allows you to estimate the spillover into other parts of the economy, into other counties in Hawaii. So I just focused on Maui because that's where you guys are at, and that's what we're talking about. But there's another 2,000 jobs lost on the other islands, mostly on Oahu, which is kind of the headquarters for a lot of economic activities. We shouldn't, ignore that.
Yeah, no need to go into
my point is who cares about Oahu? The point here is, those guys. Go back to Oahu. The structure of the economy is embedded in these models. So I got that covered. The second thing you mentioned, and I'll bring up just briefly, is this idea of reinvestment. And I think you're right on there. People, those of us who own homes, know what a money pit they are, because you got to keep putting money back into the house to keep the rain from coming in. But for owners of commercial properties, and these are commercial properties, you can't afford to have, if your drain is plugged up, you can wait a week to call the plumber, but not if you're a commercial property manager. So those units tend to be much better managed. And then in terms of who the investors are, we don't know entirely in this class, but we do know from a transaction standpoint, both for new and existing housing units, that the share of neighbor island investors comprising offshore investors is relatively large. On Oahu, it's about 15 to 20%. On the neighbor islands, it used to be, upwards of 45%. I can tell you right now, for Maui, it's 35%. So it's actually gone down. It's gone down over the last decade, which is a little surprising to me, but it makes sense when you think about the history of the last 15 years, where you had a big surge in offshore investment in the subprime bubble. And then when the bubble burst and we went into the recession 12, 15 years ago, in the 2008, 2009 recession, those investors had to get out. And so many of the buyers at that time were other offshore investors as opposed to local investors. And once that kind of settled out in the 20 teens, the local share of investors actually went up. And so right now it's about, I want to say 60% local or 65% local, 35 to 40% offshore.
Has there been any study? One of the things, on a personal basis that I've noticed, and one of the gripes that people have is this, while it doesn't really matter to the economy, because the economy, it has the stimulus associated with incoming tourist dollars, but people get angry that we have foreign ownership of these vacation rentals. And in my experience,
Yeah.
it's almost better to have, both local on Maui ownership and then international ownership, which basically just means Canadian, because those Canadians or international typically don't want to patriate American dollars into Canada because then they suffer double taxation.
Let's leave to the side the whole this bizarre idea. Oh, we keep the money in the state. By the way, that's not a thing. Okay, so if you ever hear your legislators or your state or county administration officials say we need to keep the money in the state. Okay, that's not a thing. Second,
All right, thank you.
second, I'm sorry, we just have to leave bigotry and xenophobia to one side as well. We can't, you know what? Talk amongst yourselves. We can't. We the people in making policy, economic policy, can't listen to you because you should be in the trash heap of history. So yeah, okay, don't listen to those guys. But here's the deep underlying
It doesn't really
fact.
matter about the characterization. The fact is the dollars will be constrained, and that will shrink the economy, which is going to be a negative to everybody.
So we live in an economic union with perfect factor mobility, capital, labor. You're free to move around the state, blah, blah, blah. Take you this. It's the same currency here as everywhere in the 49 states and the District of Columbia. And here's the thing. If you're worried that every time you go to Target and Walmart and Costco, and I know you go to Target, Walmart, and Costco because I seen you there, bro. If you're worried about the profits leaving the state, I mean, if you're really worried about it, I go to Lowe's all the time. I go to Home Depot and the money's leaving the state. Then go buy Lowe's, Home Depot, Target, Walmart, and Costco stock. Then you own the dividends, the profits. And even if you don't own it directly, your pension fund owns it. You see what I mean? You're the insurance company to whom you pay premiums to insure your automobile or insure your house. They invest in Home Depot, Lowe's, Walmart, Target, and you see what I mean? It's all going around all the time. This is the world we live in. The funding you got from Byron at American Savings for the mortgage for your house that they loaned to you was sourced in national and global credit and capital markets into which mortgage-backed securities are sold into these massive pools. Stop talking about the money leaving the state and stop listening to people who say, you're not from around here, then you cannot own real estate. That's not how we roll in this country.
Good to hear. So run the numbers then. What do you got some shared screen that you'd like to provide talking about
Well, I do have these. Unfortunately they're tables and they're on my other computer over here,
Okay.
and I didn't start soon enough. But the client who commissioned this particular piece of work owns my report.
I see.
I, however, own my analysis. So,
Perfect.
at some point, if it comes up, I'll be happy to run the numbers for you. And by the way, presumably the legislature, in their infinite wisdom, in contemplating the decision that they've made in enabling the counties to prohibit vacation rentals outright, because prohibition always works, right? Look at Pakalolo. Surely they called DBED to do the same study. So I'll leave that open for somebody else, a question for somebody else to answer, because I'm using DBED's model. So in principle, just call them up. They can do the analysis for you. Then you don't have to rely on Brubaker. But here's an impact I do want to try to illustrate, because it's easier by using a visualization of data. And I'm going to show you Oahu. So this is a challenge. All of you graduating from UH Maui College, all of you seniors that are looking for something to do over the summer in your spare time after you come home from your summer job, you can do the analytics on the Maui data from the Realtors Association of Maui. Here's a picture from last week. The governor and Lahaina Strong demonstrators who are the governor making the announcement about this bill, and the supporters of vacation rental prohibition lining up to demonstrate their bona fides. And here's the reality of the two things that matter, the first of which you identified at the very beginning of this conversation. We don't build enough housing in Maui, period, of any kind. Housing for people to live in, housing for people to use as a short-term habitation. And by the way, that's not all tourists. So when my brother took care of my father when he was in his 90s, we had a caregiver that came in Monday through Friday, stayed Monday through Thursday night. And then my brother would go live with my father at my father's house and be the caregiver Friday, Saturday, and Sunday night. Where did my brother stay Monday through Thursday? Anywhere he wanted. He booked a vacation rental. And so he did that for 3 years. So not everybody's staying in a vacation rental. I live by Castle Hospital, where they have visiting nurses that rotate in and through every 90 days. Where do they stay? They stay in my neighborhood for 30 days, 60 days, 90 days, visiting faculty member, people. Okay, I mean, it's not, okay.
And that's actually an exemption in the law, from my understanding, too. A lot of people don't realize.
Here's the problem: you can't really. They have an exemption for my brother who stays in an Airbnb Monday through Thursday.
I think it's nurses, teachers, something like that. Like they can rent for 3
You're
months.
missing the point. You can't make an exhaustive list of. Okay, it's bogus that you think you can identify all the things that are going on here. But underlying it all, not enough home building. In the upper left, you see the home building data, the raw data, how many housing units per quarter are being built in Maui County. The numbers in the last year, right, this last year, 2023, the 4 quarters of 2023, are lower than the average for the last 10 years. There was a period 10 years ago when it was worse because Maui County had a 50% inclusionary zoning requirement that obliterated housing. So 10 years ago, Maui County Council adopted a 50% affordable housing rule, an inclusionary zoning requirement that crushed home building to where it was 50 years earlier.
So put that into simple English so the average person understand what Paul is talking about. Basically, in order to build a profitable home, you also, for every 2 that you built, you had to build an unprofitable home or unaffordable. So
for every 50%, right? So you build one house that pays for itself, and it has to cross-subsidize another house, 50%.
Yeah.
So here's the problem. If this is the house, the inexpensive house that has to be cross-subsidized by the excess return that's received by this house, then nothing in here is going to be able to mobilize that cross-subsidy. So you end up with high-end homes and low-end homes and nothing in the middle. And it's that missing middle that you see in those data. But if you decompose those data, you pull out this long frequency cycle, the home building cycle that you see in the upper right of your screen, and you can extract the remaining components, which are an inverted U-shaped trend. So that downward trend you see there, that's the deep issue for Maui, and then a residual noise element, which is just 0. So you can add up the cycle, the trend, and the noise to get the actual data. And it's that trend where I wrote meh, right? You can see the trend, right? How good is home building on Maui? Meh. It's worse than it was at any time for which I have data, only because I don't have data before 1961. And by the way, in 1961, Maui's population was declining, not rising. So we were building more houses on Maui when the population on Maui was shrinking than we are today, although maybe the whole point of prohibiting short-term rentals is to make the population shrink. Finally, just to give you an idea of what you should be looking for, oh, here's those ownership data, right? For the neighbor islands, mainland and foreign ownership has been decreasing, not increasing. Local shares have been increasing.
Just
But
to take one
yeah,
step back, are you
this
making the
step back or
assertion?
this step back?
No, just you don't need even the slide, but what you
Yeah.
said was that reducing tourism inevitably causes people to leave the island.
Well, no, I just said if I just mean there the unemployment rate on Maui today is 5.5%. On Oahu, it's 2.5%. So there's 3% of the workforce on Maui today is out of work and looking for work, unlikely to find work at this point, right? Unless tourism grows 20 to 30%. It was 30% higher 2 years ago at the peak of the revenge travel bubble. But the message is out there: do not go to Maui, saith Aquaman. So that's who we listen to these days. And you can't expect eventually the 5,000 people who lost their jobs in the last year and can't find a job, you can't expect them to just twist in the wind for another couple of years. Eventually, they'll go to where they can find jobs. If you add to that 10,000 more jobs, or with the delta, right, with the instantaneous induced impact of that, another 5,000. I mean, if 10,000, 20,000, 10, 15, 20,000 people in Maui are out of work, they're not hanging around. And here's the irony. Who are these? You're going to convert 7,000 short-term rentals into long-term rentals, except the people who would live in them are going to have to leave. You just eliminated their job. So it's kind of bizarre. Now, I wanted to show you one more thing, just because
Please do.
it's a sign of things to come, I think. Now, these are Oahu data, so your mileage may vary. You should check it out on Maui. Look at months of inventory remaining. You alluded to this earlier, talking about clients who are, reconsidering their investments. On Oahu, the number of months of inventory remaining, just the last few months, has in the condo space, where most of these short-term rentals, right, on Oahu, most of the short-term rentals are condos in Waikiki itself, or sort of around, in the Kapiolani, Ala Moana Center type corridor, Koriamoku Street, right, Kaka'ako, right? They're sort of around there, and those listings have been piling up. Condo inventories have been piling up in a way that's not happening to single-family homes. Usually, these things move together. Back in 2019, when the Honolulu City Council began talking about enforcing the 1989 prohibition of short-term rentals, we already saw a sort of mini pileup. And we saw a pileup during the pandemic because people prefer to work from home in a detached dwelling than a multifamily dwelling. But this pileup right now is associated with the recent political agitation and a successful passage of that bill in the ledge to enable the counties to prohibit short-term rentals outright. You also see it in Oahu new listings, an extra 100 units on top of the 500 that were already being listed every month. A relatively low flow of new listings because of the high interest rates, but you see this big jump in condo listings, again, while this legislative debate has been underway for the last several months, and you see that is not being replicated on the single family side of the market. So there are already things happening. Investors are forward looking. When the mayor tells you that the economic activity to which your investment currently is committed is going to be illegal in the next year or two, people don't wait. You don't want to be the last mover in the fire sale, right? You want to be the first guy out and redeploy your assets and go buy NVIDIA stock or something. so just the threat, just the uncertainty
That was not
created.
financial advice. No.
Yeah, 1 year ago, you want to go back in time and buy
Yeah.
Nvidia stock, buy AI stock. But yes, just the change in expectations and the uncertainty, political uncertainty itself,
Yeah,
is
political uncertainty
already
comes a
throwing
huge thing into
shade
play here.
on
I mean, that's
investment
one thing
activity
I'd like to mention
and
more specifically.
starting a little bit of a fire sale there in
When
the
I
condo
wanted to
space.
talk about that a little bit more specifically, the uncertainty associated with this and how this affects people, that own these condos as well as that are long-term renting these condos. So, I have a great multitude of clients when, more than 20 years of selling real estate on the island. And, I also specifically started Aloha Rental Management as a means of renting to fire victims. And one of these clients who's a very sweet couple, they wanted to just do what they could, and they have a Koa resort. It literally has the word resort in the name, but it is one of
Mm,
these Minatoya properties.
mm.
So they have put somebody in there, and they're very happy that they're contributing to housing and whatnot. And now they're locked in with a tenant, and then this bill gets passed and they're going to be seeing their property values plummet and they can't sell their place because there's a long-term tenant in it, literally getting punished for their efforts to
For
help the local economy. And with
uh,
housing you know,
how
it's
ironic is that?
and I'm seeing it over and over again. And these other frustrations I have is just from a federal government level, and dealing with trying to actually put people into the contracts that I have. I have multiple places that are actually just sitting vacant, and they have been vacant for several months because of the ostracized process of just putting people in there. It would have been great if they, instead of dealing with a federal process, just dealt with local property managements, but I digress. Nonetheless, these people who have volunteered their vacation rentals to be long-term housing for fire victims are now getting it worse than anybody because of their inelasticity of being able to liquidate their assets.
Look, you have to admire the professionals who engage in disaster recovery. I mean, I work with I'm a subcontractor to a contractor or I was anyway. I haven't done any work recently, but I was a subcontractor to a contractor who works with I call them the acronyms, these agencies that swoop in after a hurricane, after a wildfire, after natural disasters to try to help people stand up these recovery efforts. And, they know what they're doing, but these are bureaucracies. And as you say, it's possible, for people to get lost in the machine, so to speak, and for these ironic and perverse outcomes as that you've just described. But to my mind, watching what's happening, I think what people are missing, and this is the thing we just talked about, you can build houses. What
No,
does the Department of Planning do? Don't they have plans for the next 10,000 houses? Surely that's what their job is. Let me show you how the big girls do this. These are the data from Kauai after Hurricane Iniki. So it's been 9 months since the wildfire. Within 6 months of Hurricane Iniki, in which every house on the island was damaged or destroyed. Not, I get Lahaina is toxic and you can't build there right now, but not every part of Maui is toxic. On
no.
Kauai, within 6 months of the hurricane, 2/3 of all the residential building permits for reconstruction, permits issued by the Kauai Office of Emergency Permitting, what did I say? 2/3 of all the value of residential reconstruction had been authorized by the county within 6 months of the hurricane. These are the actual data from the mid 1990s. So it's been done. Call up Joanne Yukimura. She's working on climate change. Call up these people who've done this before. And
Who is that? Say it again. She was able
Mayor
to.
Joanne Yukimura,
Yukimura. Okay.
she and longtime member of the Kauai County Council, and now she's engaged in climate change initiatives of one sort or another. I mean, she's just a consummate lifetime public service, committed to public service, and was had just become mayor when I think a couple years earlier or something when Hurricane Iniki came around, and we get that you didn't plan. Mayor Bisson did not plan to have to deal with this as his number one priority for the entirety of his first administration with any luck. But what I'm saying is, to whatever extent the county and Mayor Bisson's peeps, the planning department, are working on getting home building moved forward, work harder and faster. Because if you build the houses, you don't need to rip off somebody else to get a house. That's
Yeah.
what I'm saying.
That's
Mayor
been my whole
Bisson,
argument,
Mayor Bisson recognizes this because he knows jurisprudence, right? Judge Bisson mentioned last week, we may face some litigation over this. Fine, understanding that, that's even more reason to push forward on the rebuild initiative. I'm sure they're operating on parallel tracks. I'm just saying, make
Yeah.
this a bullet train.
And the nice thing, actually, just to go back to the toxicity associated with the soil, obviously there are ongoing testing, but the preliminary testing is actually showing that temperatures are so unbelievably high that it, vaporize most of the most dangerous compounds associated with it. So,
That's like the good news.
well, and the other good news is they
Yeah.
spray like this glue down on top of the ash in order
Okay,
to
right.
prevent it from seeping into the
Sure.
soil. So obviously continued testing needs to happen before we understand the full impacts associated, but it seems to have worked, which is
Well,
amazing.
let's just step back for a second. Okay, Lahaina was a seawall. Let's be clear here. And like old Lahaina town was basically Front Street was a seawall. And have you heard of climate change and sea rise? Okay, this is the opportunity to do something, Malka. You're going to have to anyway, as you might as well put on your thinking caps, because hardening the seawall and backfilling or whatever you're going to restore the canals or whatever these people who talk about the Venice of the Pacific, dude, everything has to move, Malka. Everything, because of sea rise. This is the moment. You have a plan for that, right?
No,
No? Yes? Whatever. Through the plan, let's move everything, Malka.
Yeah. Well,
This,
is there,
this is the moment to double down on all that stuff.
now, Byron, do you have any specific questions associated with this and the impact?
I had a question for Byron about,
Oh, yeah, please do.
how lenders look at this form of political risk, in terms of credit decision making.
Well, since it's fresh, nobody's taken a real deep look at it yet. They've kind of started to. I think as it progresses, it might become a challenging situation because of the fact that how is the lender if it could start with an appraisal. The appraiser might put, the change happening. Then what does the lender do at that point? Do the lenders put a pause on lending on all these units with the potential litigation, potential law change? There's many things that are being kind of discussed in the beginning because I think we're in the infancy stage. We really don't know what's going to happen. But there could be a halt altogether, and hey, we cannot finance these till the litigation gets resolved or the laws get passed so we know what we're dealing with. Because I think right now, to me, it feels like with all this fixing of it, we're fixing the sins of our past, right? So to speak, with the planning. That's what it sounds like. The A2s and the A1s that got through as vacation rentals is how do we fix it to get on the right path forward? Do we stop them all? Or do we say, hey, if you opt out, maybe we'll give you a tax cut? There might be other ways to look at this whole thing, slowly integrate back. I just don't know because there's a lot of action going on right now.
Carrot versus the stick,
Well, you got these guys like, this young fella, Sterling Higa. He's a Maui boy and has a nonprofit, Hawaii's Housing Future, I think it's called. These guys are saying, you need to rethink zoning, period. What do we even have all these categories for? Let me come back to something to which you alluded, Byron. So it seems to me, right, an investor that owns one of these properties, so your aunt, from Las Vegas or your aunt from Kihei, who owns one of these units. She owns one building, one of these condos. It's on a short-term rental basis. She's hooked up with Clint's property management team to provide whatever. This investor had the choice between a long-term rental and a short-term rental, and having made the choice to do short-term rental, revealed that to the owner, it was a higher valued investment opportunity than the long-term rental. So it had higher value. So what we're saying here is this law probably reduces the value of the property, but an entire credit structure underlying these investments, which relies on collateralizing the income streams from these rentals, or more abstractly, the value of the housing or lodging services generated by this physical capital, yeah, that value goes down, the collateral values go down, whether the appraiser is the first to, do the mark to market, or whether just the rules of how banks manage capital adequacy and risk on their balance sheet, there's going to, we're not talking about an enhancement of value. And the irony is, and so we're talking about a collapse of credit. And the irony is that I thought the whole idea of advocates is to create housing for people, which, as I've just suggested, are the most likely to be the ones who will be out of a job when this, at the end of the day, the 10,000 people are not going to be rocket scientists, right?
Mhm.
The people who lose those jobs are not going to be professional and scientific and technical services
Yeah,
providers
they're going to have
who
a
are
single.
remote workers in
They're
households
typically
earning
going to have.
$200,000.
They're going to have like one income stream associated with a paycheck, not somebody who is, invested in multiple different avenues and income streams. So the people that are going to be affected is exactly the opposite of what's intended. I mean, it's going to have more impact on the lower income than it is on the higher income.
When again, we could just be building multifamily
That's what I'm saying.
communities.
The taxes can go to build infrastructure to make housing.
Well, the private investors, just let the private builders build what they can build. I'll make you a list of the guys who will build those units.
The county can actually make money from this. They do realize they can acquire land, entitle it, sell it to a developer, and put encumbrances on it to build affordable housing. It ain't rocket science.
How do you think the rest of Maui's housing stock was built? Because it was all built.
Not South Maui, though.
That's what I was going to ask you, Paul. In the 70s, your chart said the highest growth for Maui. Yeah. I believe it was part of all of Kahului, those increments where the county was helping, right? I mean, it sounds like, remember when county did all those homes in the Kahului area?
Well, my understanding of the way it used to work, and by the way, this is, I was in high school, but when I was in high school, 2,000 units a year were being built on Maui. 2,000 units a year. Last year it was 300. So it's been done without computers, and as you suggest, because you can just see it if you've been to Maui or if you've flown into Maui, you just look out the window, and you can see the kind of tract homes that radiate outward, southward across the isthmus from the Wailuku Kahului conurbation, the Kahului Wailuku conurbation, right? And so the classic mid 20th century motor vehicular transportation based urbanization, spatial urbanization model was to radiate outward across the flat land. And there's plenty of flat land on the isthmus on which to do it. However, we're past that point, right? Because before affordable motor vehicular transportation, you had to walk to work. So you lived near Punene Mill, or you lived near the harbor, or you live at Camp Number 6 or whatever out on the plantation. With cars, we could do towns like Kahului, Wailuku, which are like big Southern California suburbs. But this is not the Inland Empire. And we've reached the point now where, the commute from Central Maui to West Maui on a 2-lane is ridiculous. It's not worth your time to spend an hour or 45 minutes in the car every day for that lousy job. That's why so many people are working remotely. But in terms of urban spatial form, it means that the county should probably be focused on doing these people a favor who are most likely to be excluded from housing opportunity by creating, medium density, multifamily housing capacity in and around these agglomerations. Kahului, Kihei, Wailea, probably more Kihei than Wailea. And again, probably Malka than Makai because the ocean coming inside. But you don't have to, you don't have to radiate. These people who say, well, we reached our carrying capacity. Fine, whatever you think carrying capacity is. Maui's got 1/6 the population of Oahu, and it's a bigger island. So yeah, there's more capacity than you think. But even if you were just to switch from the 20th century suburban spatial expansion of urban form to a 21st century urban form that's denser, more compact, because density is proximity and proximity is mobility, you'd be doing the very households we're talking about a big favor. You have to be careful about where that goes, but that's the pitch, and everybody's been making the same pitch for many, many years now.
Well, is there something that you would like to talk about, or any other questions before we wrap this up? Because we're getting just about to the end of the show.
I'm just the one thing I keep asking people about,
Anti-neutron bomb?
I've been, the anti-neutron bomb, which, by the way, kills buildings and leaves people standing. So that's my metaphor for eliminating 7,000 short-term rental units. I'm actually curious, Byron, what your opinion is or expectation is for long-term interest rates and the mortgage rate in particular, because I've been so wrong for the last year. I thought rates would have come down by now, and I'm still
I was
waiting.
right, baby. I was right. What I tell you, our last meeting, I was like, higher for longer.
Your guess. I mean, you're better at it than me.
I am the opposite of good at it.
Well, my thoughts are, I think after the election, I think you're going to see not this year. I believe it's going to be like probably maybe second quarter in 2025, or first quarter. You're going to see some gradual go downward. How fast? It just really depends on your economic things. But I see it happen in the next 2 years. That's my gut. Now, I don't think it's going to go down to 3%. I think you're going to probably land or hover high 4s, maybe low 5s is probably the landing spot.
Yeah, I would say 5%. Like, we're not going to see 3. We had 7. Neither one of those is realistic, and I'll be happy to split the difference. A 5% mortgage rate would be what I would say is about as good as we'll get. And we're at what, 6.6, 6.7, 6.8 right now.
Well, today it's about 7.375. That's paying no points for it.
Okay. So call it a 7, and we were at 3. When you the thing that's made affordability so much more problematic is the mortgage interest rate. Going from 3 to 7% is the kiss of death. It kind of doesn't matter what else you're doing. Your ban vacation rentals, fine. You still have to pay 7% for something that people were just paying 3% for. Now, the right number is 5, because 3% is a post-pandemic number. And the only reason I ask you guys, here are the inflation numbers, right? The high interest rates are about bringing the inflation rate down. We did for a while last year, and then look at the urban Hawaii number. It jumped from 2% 3 months ago to 5%, and that's all about housing costs. If you look at the decomposition, it's all about owners and renters' costs in the Hawaii Consumer Price Index inflation. So the rates won't come down till the inflation comes down as the problem.
Well, all I have to say is, I told you so.
Yeah.
One of our last meetings, I was like,
man,
interest rates
so right.
are higher for longer, and the only thing that's going to keep the economy from going down is AI. It's going to balance this out and artificially inflate the stock market. And bam, I was right.
Unless it all kills us.
That's later with the robots with the lasers. All right.
Okay. So. I think I saw that movie, but yeah. Okay.
Well, thank you so much for joining us today. I really appreciate
great time, you guys. Thanks. Yeah.
Potential bill, and hopefully people will take this into consideration when they have these discussions later on.
I think there are other ways to solve this problem. So
it's called
just
building.
Saying. Yeah.
Let's create, not destroy. I
mean,
there you go. The legal consequences and costs for the county are going to be far in excess of just using that money to build housing, as opposed to defend against suits from thousands of people.
Well, and as you know, is true in Byron's world, don't create more legal uncertainty. It's just going to make the lenders unable to back you up.
Exactly. So thank you so much. I really appreciate it. Again, this is Paul Brubaker, and let's wrap it up and give our goodbyes.
Aloha, you guys.
Yeah.
Thank you. Aloha.
Aloha, Byron Yap, Axia Home, and Clint Hansen of Maui Luxury Real Estate. What's that?
ASB, American Savings
Yeah,
Bank.
ASB, American Savings Bank. Sorry.
Okay.
And Clint Hansen of Maui Real Estate Radio. You can listen to this and all of our shows at mauirealestateradio.com. Have a wonderful day. Aloha.
Thank you. Bye-bye.